Hello, and welcome to Inside China AI. Today is May 13th, 2026. I'm Gabrielle Xu, Associate Professor of Practice at NYU Shanghai, and I'm joined by Lucie Tan, AI Analyst. Together, we're looking back at the month in China's AI economy. Here's our thesis for this month. The China AI story isn't really about model releases anymore. The stronger signal is that the market itself is becoming structured. Regulators are starting to define what an AI agent actually is. State-linked capital is moving toward the frontier labs. Cross-border AI deals are getting harder to close. Compute scarcity is pushing Chinese labs toward architectural efficiency rather than scale. Blocked access to Western models is producing a grey market in infrastructure, and consumer AI companies are finally testing whether users will pay for compute-heavy products.
So if you're an executive, an investor, a consultant, or sitting on a board, the question this month isn't which Chinese model is best. The better question is, where is China's AI market becoming regulated, funded, protected, priced, or embedded into infrastructure? That's what Lucy and I are going to unpack today.
Okay, so here's something to think about. China's AI market isn't just about flashy new models anymore. It's about how the entire ecosystem is being structured, regulated, funded, and even protected. That's where the real story is this month.
That's such a shift, isn't it? For so long, it felt like the focus was on who could release the biggest or most powerful model. But now it's like the market itself is becoming the bigger story. What's driving this change?
Well, it's a combination of things. Regulators are stepping in to define what AI agents actually are and how they should behave. State-linked capital is flowing into frontier labs, while cross-border AI deals are getting harder to close. And then there's compute scarcity, which is forcing Chinese labs to innovate in ways that go beyond just scaling up. It's like all these forces are converging at once.
And it's not just about the technology anymore, right? It's about how AI is being embedded into infrastructure, how it's being monetized, and even how grey markets are emerging to fill gaps in access. There's so much to unpack here.
Exactly. So let's start with governance, because that's where we're seeing some of the most significant changes. This month, China released its first policy framework for AI agents, and it's a game changer.
So, this new framework, what's the big deal? How is it different from the way AI has been regulated in China before?
The difference is huge. Up until now, most of the regulation around AI in China has been focused on content, things like deepfakes, misinformation, and algorithmic governance. But this new framework shifts the focus to AI agents. These aren't just systems that generate content, they're systems that can act, remember, and make decisions. They can interact with users over time, trigger workflows, and even influence behavior. That changes the entire regulatory landscape.
Right? Because with content, the question is usually, what did the AI say? But with agents, the question becomes, what did the AI do? Under whose authority? With what data? And what were the consequences? That's a much more complex set of issues.
Exactly. And this is especially important for industries where AI agents are becoming more integrated into daily workflows. Things like customer service, education, gaming, and even financial services. Regulators are essentially saying, we're not just going to look at what these systems produce, we're going to look at how they behave and how they interact with people.
And then there's the issue of minors, which seems to be a big focus for regulators. What's going on there?
That's a really interesting angle. AI safety in China flagged this earlier in the month, pointing to concerns about AI companions for minors. It's not just about misinformation anymore, it's about emotional dependency and behavioral guidance. Think about tutoring agents, virtual idols, or even AI roleplay in social apps. These are systems designed to keep young users engaged, and that raises all kinds of ethical and regulatory questions.
So it's not just, can the AI say something harmful? It's more like, what happens when a system is designed to create emotional attachment or guide behaviour? That's a whole new layer of complexity.
Exactly. And it's not just about setting boundaries, it's also about enabling adoption. For example, Wuhan is driving initiatives to help people deploy open source agents. Tencent and other companies are setting up offline booths to support this. It's a classic example of how China scales technology, not just through app downloads, but through physical, community-based mobilization.
That's such a good point. And then there's the surveillance angle. AI is being used in Chinese classrooms to track everything from student attention to teacher behaviour. It's not exactly an AI agent story, but it's part of the same governance conversation. It shows how AI in education can move from empowerment to compliance and even behavioural management.
So, what's the takeaway here for companies operating in China? I think it's this: treat AI agents as a compliance category, not just an innovation category. If your product interacts with minors, stores memory, or takes action on behalf of users, you need to be prepared for regulatory scrutiny.
That makes sense. And it's a good segue into our next topic: AI assets becoming strategic infrastructure. Let's talk about the Manus case and what it means for cross-border AI deals.
The Manus case is fascinating because it's a clear example of how AI assets are becoming too strategic to sell. Beijing blocked the Meta Manus deal, and this wasn't just about one acquisition. It's part of a larger pattern where AI companies are being treated as strategic infrastructure.
And then there's the other side of the story: DeepSeek. After releasing its V4 model, DeepSeek reportedly started seeking external funding for the first time. The round could be led by China's Big Fund, which is the same state-backed vehicle that invests in semiconductor companies like SMIC. This suggests that AI labs are being put on the same strategic ledger as chip foundries.
That's a huge shift. It's no longer just about market opportunities, it's about ownership, control, and national security. The Manus case says some AI assets can't leave the system. The DeepSeek case says some AI assets deserve state-backed funding to become infrastructure. Together, they tell a story about how China is drawing lines around its AI ecosystem.
And DeepSeek is an interesting case in itself. It started as a research-first lab, backed by a quant trading firm, and now it's moving toward a more formal capital structure. This shift seems to be driven by pressures like talent retention, rising research costs, and the need for equity incentives.
For foreign companies, this changes the M&A landscape. It's not just about valuation or regulatory approval anymore. Now you have to ask, is this AI asset politically acquirable? Would Chinese authorities view it as strategic? These are questions that didn't exist a few years ago.
And for companies operating in China, understanding which AI labs are becoming part of the domestic stack is crucial. This affects everything from procurement and cloud partnerships to API availability and data residency.
So the takeaway here is clear. AI labs in China are not just startups anymore. They're becoming strategic assets, and that has implications for both domestic and international players. Let's move on to our next topic: capital concentration around model labs.
This month, we saw some massive funding rounds for Chinese model labs. DeepSeek, Moonshot, and StepFun are all raising billions, but this isn't a general revival of tech VC in China. It's a selective wave of funding focused on labs that could become infrastructure.
Right. Moonshot, for example, raised $2 billion, reportedly led by Meituan. And this isn't just an AI bet for Meituan, it's a control of interface bet. If AI agents become the interface for services like food delivery or hotel bookings, Meituan can't afford to be absent from the model layer.
Then there's StepFun, which is taking a different route. It's embedding AI in hardware, phones, cars, even intelligent cockpit systems. Its models are already deployed on more than 42 million devices, and it's aiming for 1 million vehicle integrations by the end of 2026.
And DeepSeek remains the research-first case. But even a famous lab like DeepSeek needs a capital structure to retain talent and scale its research. It's a reminder that even the most innovative labs face market pressures.
So, what should boards be watching? It's not just about who raised the most money, it's about which labs are becoming dependency layers for the ecosystem. Whether it's DeepSeek for open architecture, Moonshot for agentic capability, or StepFun for embedded AI, these are the labs to keep an eye on.
And that brings us to our next topic: compute scarcity and how it's shaping AI architecture in China. Let's talk about DeepSeek V4.
DeepSeek V4 is a fascinating example of how Chinese labs are innovating under compute constraints. It's not just a bigger model, it's designed to make long context AI more economically usable.
That's our read on the month. If you want to go deeper on any of this, Inside China AI is a free newsletter on Substack. You can find it at insidechinaai.substack.com. 4 issues a month, a deep thesis piece, a visual argument, a signal scan of what moved and why it matters, and one company portrait. Speaking of which, next week's portrait is Tencent. And Tencent is, I think, one of the most underestimated AI stories in China right now. While everyone has been watching DeepSeek and Moonshot, Tencent has been making a series of very quiet, very clever moves in models, in distribution, in how they're embedding AI into WeChat. We'll get into all of it. Thank you for listening, Lucie. And thank you all. See you next week.